start off with a interactive question from Davis. So Davis, whenever you are ready.
Mic check.
Yes, I hear you. You're a little bit low. Let me just check if that's me or if that's you.
Yeah, let me know. Let me know when I sound good enough to continue here.
You're getting way better.
Alrighty, I'll just
Oh, perfect.
yell.
There you go.
Yeah, I'll just yell at you a little bit here. Before you yell at me. No, just kidding. So this is my question. Originally submitted it with a NVIDIA NVDA chart.
Yeah, I'm
Uh,
gonna bring the chat into
yeah, and I posted GSIT in there as well.
yes, Jay, that's the second one. So we can go to whichever ones that it's your question. You let me know.
Yeah, very, very different examples. And since we don't, I know you also traded GSIT, so we have some of those prints in mind when we
Mm.
talk about this question for that one. But for NVDA, I really wanted to, it's more generic, but we could almost make up what the prints were or sort of apply, uh, an idea of if there were these prints, this is what we would do. So let me read the question off here. Rich, can you talk about how you would go about maximizing a stock that has not hit the original price target, but gives multiple opportunities to manage and or add? I'm going to supply the NVDA chart below as an example, but we might want to make up prints at certain spots to make the convo more applicable. And so let me close that part and check out this screen here. Yeah, so obviously these are two very different examples, Rich, but to your point about things being slow, I want to get to the point to the place where I am maximizing when a trade does show that it's going to move and give trades that day. I've been using the phrase make 100 cents out of 80 cents, right? If that price target's 80 cents away and it gives the opportunity to manage smartly and add back, really making the most out of the trade at hand, out of the active stock in front of us. And so that's where this question comes from.
All right, so it's going to be interesting because, as you know, I could look at this chart right now and I could make up a bunch of stuff, but I have no idea. I have no idea what the scenario in this NVDA chart would be for me to tell you exactly where to go. But what I can
Well,
do
yeah,
is
go
kind
ahead.
of give you an idea first before we could set examples. We could go to the GSIT and start understanding. But I'm going to tell you something right now. A lot of the maximization and adding ability from what I've seen just since we've started classes is taking prints for exactly what they say they want to do at that moment.
Yeah.
And that's a weird thing to start to think about. But the whole thing about tape reading is that the way that they use their prints technically can change. Right now, with and I never want to bring anything complicated into it because I don't pay that much attention to it, but are we really seeing a ton of building happening throughout a trade, or are we starting to see building happening almost the next day?
Yeah, very trend heavy, I would call it.
Mm-hmm.
And AMD, there's a number of good examples out there, but you'll see once they sort of set that direction and show you the prints, they'll stick with that theme until the next day or even a couple days later when you get an all at once pullback.
So, and that's one of the biggest things that, especially within my own trading and going about maximizing things, is I used to see huge ask prints, and I'm still going to teach the rules, but the rules again are always going to be a foundation to understand when things are changing. So right now, the best times to maximize that I've found is actually just off of ask prints. If obviously in this, if we were going long, in this case, it would be bid prints going short. We're not seeing a build that's coming from the prints. We're seeing almost a, I don't want to say scared reactions to it, but it's almost like they're not willing to allow the stock to even do anything else but exactly what the prints are showing. Because at the end of the day, when someone buys, where do they have to make money?
Above.
Above. I mean, it's just that simple. And that's really what we've been seeing going into things. Building trades haven't really been there. But if you actually notice the pattern, the building trades are coming the following day. So we've been very trend heavy in almost every single stock that we've been watching, where I'm looking for the foundation within those prints to give me kind of a bottom line. So let's, for instance, we'll use the NVDA example right now. So when I see it come up, let's just say I'm getting in right here off 288. As we're coming down, 287 bid prints are actually a reason for it to start continuing. Now, I wish we had the NVDA chart for the day afterwards to showing, we really had that data. But what we're noticing, and I'm going to pull up AMD real quick just to use it as an example. This morning, AMD was my first trade because yesterday in class, we were talking about AMD. You know what? I'm going to bring it different. I don't want to lose those prints either. So let's bring this one. Okay. We're going to bring this one down. All right. So yesterday in AMD, we were talking about, as we're coming up to that 100 level and as we were coming up to the 101 level, we saw a spot where it just said we need to build a huge amount of shares. But they're not really allowing it to go further. And I think the reason behind that, and again, well, I could give any type of opinion that I want. I think the reason behind that is because they're afraid that if it gets too, a $2 pullback doesn't seem like a lot for a lot of, for us, especially when we know the range and stuff like that. But what's happening is they're not really letting it pull back a ton because all of a sudden the entire retail starts to bail and now they have no pool that's in there anymore. Like yesterday, we saw as this thing was just pulling up, it started with 98, then 90, 98.50, 99. I mean, we were just getting heavy prints coming in. But at 100, we saw a massive amount. I mean, not only a psychological level, but this stock should have pulled back underneath 100 almost immediately. Then we come back to 101, and we should have pulled back immediately from that. It was almost the same type. But they're allowing the stock to continue. It's almost like they're afraid for it to break certain levels because the little retail that's actually out there at the moment just will bail. And now they don't really have much to work with anymore. So they're keeping it in a tighter range and keeping the stock and continuing to allow the stock to continue to show that it's strong or if it's weak. If we're talking about the NVDA where it's going down, obviously weaker, and in this case in AMD, showing that strong position. But even this morning, the first thing, all I was looking for, it's almost guaranteed, I don't want to say guaranteed, but very high probability that when we see something that happens in a day and it doesn't happen that day, we're starting to see it happen the next day. So our everyday trades are almost showing us what should happen in a trade that normally would happen now, but almost taking more time to happen. Do you understand what I mean there?
Yeah, and I don't want to put words in your mouth, but it's almost as if those levels that previously we would say, okay, those are build prints, those are now, um, really just going with the flow or going with the trend for fear of losing it to a reverse trend or something. If it does pull back and all of a sudden it's 2 days of that, those short-term market makers aren't going to, if they want to make money today, they're not going to be happy with doing it 2, 3 days from now when it does come back to quote
It's
unquote
almost like they're
money.
not sure what's going to happen 2 or 3 days from now.
Right. Hey,
So as
don't
if like,
don't blame them.
what, I'm in now, I got to make my money now. And it's so funny because I was sitting there watching AMD, and this morning, as the stock is continuing, and so once it started getting close to 100, we start to see it go into that kind of consolidation. I was like, this stock isn't going to break 100. And the reason that I was saying that it's not going to break 100 is because what happens if it broke 100?
Well, they start losing it to people start getting out, and the interest really for them to deliver on the prints they showed us diminishes.
And it's almost as it shows that they're going to lose their pool now of anything to do. So even there's not enough the people that are going to sell, even if they don't maximize that at that moment underneath 100 to get it back up above 100, they're not going to have anyone willing to help them bring it back up above 100. And we're seeing this in all these everyday stocks. I mean, almost constantly. So it's funny because if you asked me 3 months ago how I'm going to maximize a trade, well, my answer to you is I'm always going to wait for that bill. So let's say the stock's at 750, okay, and it goes up to 8, shows great 8 ask prints, okay, and it's got some shorter term prints within there. I'm always going to look for a spot to add underneath that 8, and almost as it's a new trade. Versus what the pattern that we've just been seeing over the past month is, it's especially the beginning of earnings seasons, but it started happening a little bit before that, is that those prints that are coming in, they just want it to continue. The pool's only being built in drastic trend type moves.
And so let's use this AMD, because the NVIDIA chart that I shared, looks like, again, we could invent prints for almost any scenario,
Of
but
course.
that one looks like it had some pull-ups in different places to add, but it's not as pertinent. It's not as relevant to what we're seeing out there.
But
So,
see, it kind of is when you think about a stock that's $288.
right, right.
So that
Because
looks
within the
like a big
range.
pull up or pull down, but it's $288. Is it really?
No,
If you're trading a $288 stock, more than likely, especially if you're trading it on the long-term sides of things, $3 or $4 isn't really going to affect your difference in what your expectations are going to be, versus
right.
a stock like Tesla or something that's cheaper, where you're not going to see as drastic moves. It's really the range almost kind of makes you look at it in a different way, but it fits perfectly when you scale it down to a cheaper stock. It's just
So
not
in
going to
terms,
look as drastic.
yeah, and in terms of management, so one of the things that I can think, based on what you're saying, one of the things I could see as an adjustment to make in our management is, let's say we get into a stock, it hasn't yet gotten to our price target, and we get above print personality prints, in this case in
Hmm.
the same direction. Previously, we'd maybe look at that as, okay, they need to build on that, we need to manage a certain amount. How has your thought process changed now when you get that next set of prints?
So it's funny because I used to look at it almost as a point where as long as it showed a little something, I was okay with it. Now it needs to be drastic. It needs to be something that just is so blatantly obvious. I mean, the amount of trades I used to make, I remember a time back in the day, and just going in and out, we're talking about 50 different times within a day. I can't remember the last time I made over 10 trades. So the management aspect is really kind of focusing on one stock that's going to give you that volatility.
Are you, and certainly this is case by case, but are you adding to, let's take AMD, it prints, what was it today? 102. You get into
Hmm.
a trade after a pullback, and then you see 102 prints again. Is that something you're considering adding to again maximize the trading stock in front of you
So that's a great
without a
question.
without a second pullback on those 102 prints, that sort of
So
thing?
I'm going to tell you something right now. It used to be the controlling prints alone could make me either add
Manage.
or manage or
Yeah.
do something of that nature. And now I need all the variables together. So not only do I need those controlling prints, but if I'm looking for it to continue down, I'm going to need supporting shorter term prints. I'm going to need to see something that's completely obvious. And it's funny because we were doing, class yesterday, and the way my mindset works compared to the way that we need to teach is very different. I can take I can take today and be like, you know what? Every print that I see, I'm going to expect it's just going to go exact. So every buy print I see, I'm going to expect it to go higher. I
Yeah,
can do that, but I can't teach that yet because it hasn't been
right.
a long enough time period for me. But so my trading is a little bit different at this moment because it's just what we continue to keep seeing. We go back to that PYPL trade where these things are showing us obvious building and they're just not doing it. It's almost like they're afraid something big is about to happen. So when they show those huge prints that typically are longer term prints, they're really just trying to make a ton of money right now. I've seen a complete switch, and it really started a couple weeks before this most recent earnings seasons. But then the earnings seasons, once it came in, I mean, we're just seeing it over and over again. And at the end of the day, I could have the best rules in the world, but if they start using prints a little bit differently, I gotta adapt. And that's what we're seeing. Now, it's not changing any cheaper stocks for the most part, although actually at the same time it kind of is. I still need my controlling prints because that's what gives me kind of the baseline of where I feel comfortable. It still gives me that support because I know there's somebody that's actually there. But, we're seeing, let's say grade 8 ask prints and the stock just pushes to 90. But then there's another thing that I was telling you all in class is what's my real number if I think the stock's got to move a dollar?
Looking at that 80-cent mark. And
And
we saw
has
that in
anyone else
JSIQ.
noticed that over and over again?
Saw it again today in Sheila.
But it's just continuously happening. It's almost like, I don't want to say scared money, but I'm going to make my money.
I
And
had
if
a
it's
word
20 cents less, then, you know,
I had a word that maybe applies to these controlling prints we're seeing, and it was stubborn. They're almost stubborn about a pullback because they don't want to buck that trend. And so, does that, if, and I'm not sure if you like that word, certainly weigh in on it, but is
no,
it
that's
such
exactly what it is.
is it such that, so if the market makers are being stubborn, and stubborn might be, we call them exceptions, we call them a lot of things, that's really becoming more and more common. So if the market makers are trading that way, should that also be how we are managing our trades,
Has to be. We're
instead of
following.
seeing the giant 103, and taking
See,
50% off for a better entry, maybe be a little bit more stubborn with our management? And I use stubborn just
and
in line
so
with
yeah,
what the
stubborn's
markets are
definitely not the
seeing.
right word. I don't like that word because
Yeah.
stubborn means that you know something, but you're kind of going against it, and that's not what's happening. But it's more along the lines of that, like the money needs to be made today because something's gonna happen. Like it's almost like they're babying retail to make money right now, which is a crazy thing to see. So they're using retail instead of actually taking their shares, they're really using them to kind of just keep the stock going. Because it's almost like they're afraid to get them scared. It's like they're afraid that the pool of people they can take money from is just going to be gone. Okay, at certain levels, like for instance, AMD, I use that 100 level. I'm sitting there as it's going to 100. I'm telling myself, I'm like, this is not, they're not going to allow this to break. Because if they break 100, that whole pool shatters. But if they bring it back up 100, it actually confirms what retail's looking, and they're almost making retail feel like they're correct constantly, which is a very odd thing to see going on. It's definitely a change, but it goes back to what I'm saying is that unless we have a set of rules, we can't ever see if something changes. And I mean, not for nothing, but it's very easy to identify what we've seen. And I keep using, face value. Like the prints at face value, buying means up, the selling means down. That's not what it actually means, and that's not what it's going to mean forever. But as of right this second, that's really what we're seeing. For instance, I'm not trying to take a ton of building trades. And the reason I'm not is just because they're not, they'll build and I can still, kind of snipe from there, but it almost feels like scalping at a certain point if they're not going to give the full amounts. So my management of trades, it's actually been very hard to add on everyday stocks. Cheaper stocks, I haven't found really any type of issues, but when a stock is just pushing, to add to it is kind of like, so instead of adding, I'm managing less. That's really
Yeah, and
kind of what my strategy has been. I'm not adding a lot more shares as I typically would when you get the new trade that comes within the overall trade, but it's more not touching it as much. For instance, if I was in AMD from 98 and it hit 100 the way it did with pages of ask prints, I'm managing it almost immediately. When in the way that we're seeing things right now, I'm going to let it play a little bit.
it's easier to overmanage now.
100, and it's almost, and I don't want to call it over managing because it's the right thing to do based off of what we've seen for such a long period of time. But things are cyclical. We're in a weird spot right now.
Well, and yeah, our just because I guess where I'm at as a trader and where our conversations go a lot of the times, this is more of not the rules, but what adaptations or adjustments maybe we are seeing to those rules in the now. It's not you know
Yeah,
this isn't necessarily
100%.
something to take as
And it
part
goes
of the
back to
rules
your
going forward.
original question is, the managing and maximizing. So maximizing isn't as much right now as being able to add to it versus not taking as much away. Do you think the new influx of AI may have something to do with the change in person now? Because if there was an influx of AI, that would mean there was more volume.
I think it has
And
to do
now
with
then,
the debt
and
ceiling and everything else
yeah,
going
one
on.
of the best things about AI coming in is AI's been there forever. There's multiple people say different numbers. I always go with the lowest one. 70% of the market is technically AI. Now it's through numbers, through computers that are managing these numbers, but kind of the same concept. And AI is not at a point yet where it can trade by itself. It can't make the decisions that it needs to make. Because otherwise it would just be the same thing as algos. If it hits this number, you get at, it's not there yet. So I don't think AI has anything to do with it, and I don't think AI will ever change anything. Because not for nothing, AI is programmed to think a certain way, right? So once you see how it thinks and you know how it thinks, aren't you just following market makers at that point?
The best it would be able to do is what you just talked about. Just take its rules and adapt them a little bit to match the market.
And then we follow it. Huh. See, that's the thing about about tape reading. That can never change. There's no matter what, if it does something a certain way, we see the way that it does it and we adapt to it. But this is one of the longest periods of time that I've seen where a lot of my morning trades are actually coming from trades from yesterday that should have happened. Almost like with I was getting ready to teach swing trading, but at this point, not going to go there yet because we're in kind of a slow time and there's just too many other factors that are going in. But one of my strategy in swing trading was finding stocks that something that should have happened today didn't happen. It almost always happens the following day, and we're starting to see that a lot right now. Now, keep in mind, we also have to judge what a stock can actually do to move. So, for instance, PYPL, there's prints at 68 that technically it should be going back up to. But how does PYPL trade each day? I can't expect it to just happen tomorrow because after earnings, PYPL is going to trade like crap. So it's going to take a longer time period versus a stock like AMD, which it happened yesterday. I know it's an everyday stock. I know that it can get to where it needs to be in a day, maybe 2 days. So I can look for that to come back down to that 100. So a lot of the trades for everyday stocks, I'm carrying over something that should have happened today that didn't. And then the next day we're seeing it almost almost always following that trend. And it might not hit the exact spot that it needs to be, but it's putting us in the right direction for the trade that we need to take.
And we've talked about that minute to minute. If there's high volume, they're able to accomplish their building or their task quicker. And considering that the environment right now is low volume, it makes sense that those moves and those build moves are dragged out now day to day rather than
No
maybe
question.
hour
It's
to
like when we
hour.
talked about the Australian market. No matter what, it still shows what it's going to do. But if there's no volume, it's going to take a long time to happen.
So
Acquiring 1 million shares is not an easy thing to do.
can we pull up GSIT and talk about that one since it's a little more fresh in the mind? That was
Hmm.
good on the market stocks and what we're seeing at levels and how to manage.
Where did that go?
So for GSIT, I'll sort of change the question to I just want to know now this one didn't necessarily give pullbacks. It really when it reached a next level, it consolidated around there and then you got a nice trigger out of it. With the theme of maximizing the trading stock in front of us, can you just talk through what your checklist is or what goes through your mind when you're deciding whether or not to take off or add? Because I know what the list of things are. Are we going to get another entry? Is the risk there setting spots? But I want to know on a stock like this, what's the top thing that you're considering? What's maybe the secondary thing that you're considering? And anything there afterwards that would help influence our decisions
So,
to make the
so
most out of the stock in front of us.
well, the first thing that we look at GSIT right now, if you were brand new to trading, all it looks like is like this is just beautiful. The stock goes up. But what we have to understand is that number one, our prints are very thin. So even being able to get into a large position is very, very hard. We're going to get broken up into hundreds. We're really not going to see a ton that really shows itself. So because understanding that, GSIT was weird because it didn't really have a problem printing at the levels when it wanted to. So we would see what looks like overprint personality, but there was almost always an order there. So we kind of forget sometimes that overprint personality means that what's the average, orders out there. But if there's 100,000 share order sitting at a spot, is it really overprint personality? Or was it just available and it just hasn't been available in the first place? You know what I'm saying? So, we could come into 550 right here and understand that, their print personality is 2 and we got 5 prints. Okay, that's great. But if we come to 6 and there's 100,000 shares, is 100,000 shares being hit really over print personality, or is it just it happened to be available? So the way that we would look at that is to understand that someone wanted those shares immediately. They showed up and they took them. What would that tell me about where the stock's going from 6?
Yeah, short duration to the upside, even though it was technically above print personality, that's
But
showing
not
more
even a short, not see the short duration. Now we have to understand this is the third part that I'm going to put into it is that what's the difference between their controlling prints and the short-term prints that are coming into it. But either way, forget about anything else that happens. If there's 100,000 shares there and I instantly take it when I have the opportunity to, what am I telling you?
it's a now move. There's urgency behind it.
That's it. I want it. It's there. I take it. And now that could be two things. It could be me buying 100,000 shares from somebody, or it could be me readjusting where my inventory is. Either way, what's it telling me?
Well, we're getting ready to continue on soon.
There we
Want the
go. So I
shares
know my
back.
time frame is very short, and I'm going to be looking for. So when I see something like that, that now gives me the ability to add. Because like I said, we're not getting those great, pullbacks. Okay, it gives us, 550 ask, we pull back, then we get it. Then 6 ask, we pull back and then get it. the almost textbook way of being able to add to a trade. What I'm looking for, especially in cheaper stocks now, is just somebody that comes in that says, I need to do this now because this stock is doing that. And at that point, I'm just looking for the best entry I can get.
Because the calculations to the upside in this case, and specifically this printed out of a halt, those 606 prints, you and I talked about them. They
Yep.
were the best controlling prints of the day, other
And
than
and
maybe
that
what happened at
and that's
7.
what we talked about in class, and that those 606 were a huge thing for what you said in the chat, is that it wasn't that they didn't want to print at 6. When was the first order that came in to actually allow them to print that much?
They could only get them at 606 as they
That
show.
that was it. So 606 technically was our 6 level.
So you're not necessarily, I understand what you said about trying to get the best entry possible, and this may have pulled back and given us a great opportunity to do that, but
It
you're looking
did.
at the urgency, and so now you're just looking for the variables of confirmation of that's going to happen now. Really, it's a trigger that you're looking for.
Especially 100, but especially where's my first entry? So I'm not going to take a trade off of that because it doesn't give me a better spot than the market maker. But if I'm looking to add, if I'm in from 5 and now it's 606, I have no problem adding there. It could drop 20 cents because now I'm almost forcing myself to have to average everything together. So 606 from 5, when we average that together, I'm still in a hell of a position when someone just
Yep.
told me short term.
And so you're tacking on again, just we trade like the market makers trade. So those are those tack on. You see
Mhm.
somebody taking the baton there. Is it a full position for you there?
Never. So,
Half?
well, I don't want to say that. I don't want to say never, but the percentage is so damn low. Typically, it almost always works biggest position first because that's what made me get into the stock. So
Yep.
almost the biggest position first, and then it almost always goes down as I'm adding because that just makes sense.
Well, and especially in that scenario we just talked about, where it's not just setting up what is effectively a brand new trade. The 606 prints we're talking about were very much tack on prints with urgency. So I understand that would be lower. Do you think it's around 50? I know it's hard to give a
It
cold hard
depends
answer.
on what you can do. So, 50 might even be a little bit high depending on how, if you went in 100,000 on the first, 50%, 50,000 shares extra, that might be high. It might be 25. If you're only trading 1,000, then, 250 shares, I think that's a perfect amount to go into. So there's going to be a scale there depending on how you're trading.
Okay.
What I can't give you that exact answer. There's no 1 to 4, 1 to 5, or something like that. It's going to be based off of what you're doing. In a spot like that off 606, how confident am I to put 50,000 shares in there? Not as much, but I'm perfectly comfortable putting 20,000. So now you're talking about 20% versus if you're trading 1,000 shares, 300, I'd have no problem putting 30%. It's gonna have to be scaled depending on what you're doing. With the new trends we are seeing, what are you doing to adjust your original entry points? Nothing. My original entries are still exactly the same. I still need to have a better entry. But what I do understand is that my pullbacks are going to be a lot shorter. So, like on a number 4 trade, if I'm expecting 50 cents, I'm okay with 30 cents because we're not seeing those full pullbacks coming into there. So, that's my original entry points. I'm still always going to be looking for a pullback. I'm never seeing prints and then just getting in above those prints because that's just I'm asking for a disaster at that point. The foundation of this is not changing whatsoever, and I still find great number 4, great number 2, 1, and 3 trades that are going on out there. It's just that I have to understand when I'm focusing on an AMD or an Amazon or a Tesla or any of these market stocks, when you see something happening over and over again, you can't just say like, well, no, my rules are this. Guess what? This is what's happening. It's happening right in front of you. If something happens 9 out of 10 times, I don't care what I've ever taught you. Well, something we should start looking at, shouldn't we? And like I said, I always look for the psychological reason behind what's going on, and I really feel like the amount of retail out there is afraid to trade stocks at this moment. So what we're seeing is a lot that's being controlled by only controlling prints, and they're afraid to lose their pools. So they don't want to make drastic changes. They're kind of going at it where I see this order, so I'm trying to take almost everything I can right away for me to make my move, then take some off today at the end of the day, and then tomorrow I'm going to implement it. Again, volume. The higher the volume, how quickly can I accomplish a game plan?
Quicker.
Of course, quicker. So when we're seeing way less volume coming into stocks, what has to happen to game plans?
It extends those game plans, but also if volume's at a premium, as you've said multiple times now, the market maker doesn't want to lose the involvement or the interest that he has. So
Exactly.
they're, yeah,
So
the pools you're
this is
talking about,
exactly
the
what we're
pools at
seeing, is it
retail.
not?
Yeah.
So
And so
now I use common sense on how to go about what my decisions are.
can we talk about, I know I'm taking a lot of time here, but this is good for me.
I mean, you've been waiting 2 weeks. It's not your fault we didn't have Traders Exchange last week. You had a question. Take all the
Towards
time you
the
need.
towards the end of your trade, again in the same theme of maximizing what's in front of us, towards the end of your trade, that runner territory, are you setting spots? I know you're staying calculated in it, but sometimes what we've seen is it gets to the spot, or at least what I've seen in my trading, let me put it that way, is I'll get to a spot and I'm said, okay, this has met the calculations, but then towards the end of that runner where I'm starting to take off the last, 10% or 20% or maybe nickel and dime
Mhm.
out that last 25%, then you'll see perhaps another market maker come in, or you'll see those prints where before, big prints above print personality, I'd take it out and look for another trade. Are you hanging on to those runners a little bit longer to see how it plays out, and you're willing to let that pop up and then come back down to be sure that the trade is over? Does that
If
make sense?
anything, my runners have been shorter.
More conservative.
I'm not, yeah, way more conservative. I'm not that interested in getting extra at this point. It's just not a market condition that really
Interesting.
gives us that ability. So
So
why,
can you
like, I
expand on
don't
that?
care enough. I, and when I say I don't care enough, of course, I'm always going to trade the stock the way the stock tells me to trade it. But, like I said, coming into 80, we might come into 80 and I don't see any, they hesitate. And then all of a sudden, maybe 10 seconds later, I see prints come into 80. I don't even take those into account because why didn't you do it the second it came in? Why are you hesitating? Because I'm seeing a ton of hesitation as we're coming to those numbers. Now, not one person ever brought up what's happening as we're pushing into those 80s until I brought it up. And now you're watching for it. What's happening every time you're getting to those 80s?
You're preparing to manage or treat that like a level.
Well, forget what you're doing. What are we seeing? What's actually happening?
They're meeting their targets and
So,
calculations are
so their
coming out the same.
targets, honestly, when they say a dollar, are starting to come down in the 80s. I'm following. So if I know that they're giving up 20 cents on their normal trades, what the hell should I be doing?
The same, well, looking more at that 60 to 80
hmm
range.
So the 80s that pop in afterwards, to me, are irrelevant. That's
It's
not going to
almost the
change.
opposite of what we were talking about. If there's shares available, that 606 comes in, that's showing the urgency. In your example, if it gets to that 80 and they don't show anything like that, you're not sticking around to see if they
No,
have
so
a change of heart or something.
you're
Go ahead.
off. If it comes into the 60s and I don't see anything, once it comes in the 80s, I I don't care. Because again, if they're doing everything 20 cents more conservatively, what do you think I should be doing? So
Doing
we
it
talked about
conservative
this
to
in a
their
previous
conservative.
traders exchange. As we're coming into those 60s, if I don't see the continuation there and I don't see anything that really shows that this stock is going to be able to push past that major level, once we get into those 80s, even if something comes in, I'm managing a lot more than I normally would. Because again, I'm following. So if I notice the pattern of them is 20 cents less, I have to be 20 cents less. I'm not better than them because I'm following them.
Yeah, and what I meant was those it's a lack of adamance, whereas we saw those prints at 606, for example, shows that urgency and adamance at that spot.
But do you notice 606 is a lot different than 66 or 86?
Yep, yep, I follow you.
606 was just because they were trying to hit a major level and the only available option was at 606. That's completely different from a stock pushing, let's say, 5 to 6. So in 560s, I need to see that stock is going to push past 6 at the 60 level. I can't wait till the 80 level. So if I
Ah, I
see
gotcha.
nothing at that 60 level, once it comes to that 80 level, I'm managing it very conservatively because
Uh,
that's what they're doing. Tops and bottoms are for me. So if they're doing it 20 cents less, I got to do it 20 cents less.
That is so different than how I've been looking at it. I've been looking at it as, let them show me, but they are showing me. It's just now in the 60s or 70s as opposed to actually getting to that target and seeing what they're going to do there. Yeah, I have to flip the switch on that a little bit and understand what they're showing in the 60s is indicative of the rest of that target or rest of the expectations.
And you're going to notice that it's almost going to give you, a I don't want to say an exact, but you're going to notice that if it doesn't come in the 60s, they manage the 80s. If it comes in the 60s, it manages the dollars now. It's a complete different way of looking at it, but that's how I have to be conservative. My goal every day in and day out, is just to make sure I'm always consistent, I'm always profitable. And I utilize exactly what the market shows. But if this is what they're showing me, what's my other option? Am I going to create a new market by myself? Because that's not going to happen. So they're
Yep.
showing me this over and over again. Like, if I choose to just ignore it, that's my fault, and I deserve to lose all my money. I don't get to pick what I want. If I got to pick what I want, every stock would just move $10 every day. Beautiful prints. It would be the best life in the world. That's not ever going to happen.
How do
You
we
need
get
to.
you into that position?
Well, you would never get shares from anybody because no one would ever be willing to sell.
But I
So
think
when
that
we
that
we see
clarifies it
these
a ton.
calculations, one of the things that a lot of people are just kind of missing is that things change. The prints are the prints, but the pattern, we have to find patterns that go throughout them. Right now, the pattern's kind of weird, but it's consistent. So why am I going to fight it?
I think what it is for me, and maybe this is in closing here, at least for my part, is if you're looking from 80 to the next dollar for reason to manage, you're 20 cents late to what you're looking in the wrong spot.
You're getting barred at that point. And then you're
Yeah,
going to
so
say, well, it had another 20 cents. Why did I just lose all my profit?
you missed the information. It's like you looked over kind of over top of where it should have been, where the market is recently. These adaptations are telling you to look.
Yeah, because you're
Yeah,
not paying attention to patterns. I mean, it's not a coincidence that I can't just make this stuff up. It obviously has to happen afterwards. But once I told you guys all that they're managing in the 80s, how many stocks have you noticed that they manage exactly in the 80s unless it's going to get a push? And
I
that
mean, this
those
one in
80s,
front of us
managing it
told you.
by understanding what's in the 60s, by waiting for the 80s, now you're waiting for prints. And then how easy is it to get barred and lose 40 cents of your profit so quickly?
Your exposure goes through the roof.
There you go.
That's good. That's a lot of the things you said are very different than how I've been approaching it. Hence the question. But thank you for that.
Of course. But I mean, it's these type of interactive questions that are going to, that change the way that you're going to look at it and then change the way that your trades are going to end up. Because not for nothing, we can follow something that showed a month ago over and over and over again, but if they keep showing us the opposite, well, it is what it is. That's, you know, the methodology of tape reading isn't just we find a set of patterns and those patterns will work forever. That the basis of those patterns work forever. But there's going to be times where they don't want to build a lot. There's going to be times where stocks, one day you'll be sitting there and all the tech stocks, they're going to start moving hundreds of dollars. We're going to see crazy things happen. I've seen crazy things happen. This is just the way the stock market works, but we have to understand what are those patterns. If every time I think the stock should move a dollar, it keeps getting, managed at the 80 and it stops at the 80s, well, shouldn't I pay attention at the 80s? Well, no, because if I pay attention at the 80s, it's too late. So where do
Yep.
I pay attention? Where's the only other go type prints that I can look at?
You have to make the same adjustments and look to that 60 to 70, 60 to 80 range.
Exactly. It's got to be in the 60s.
Yep.
So if I don't make that adjustment, I'm going to have a lot of days where I'm not going to be happy. And then I
You,
start cursing out the market. The rules don't work. It's all about our percentages. And if you
well, and for this,
notice, when we get the prints do exactly what the prints say they're going to do. It's just noticing where we need to look for them. If we're not paying attention at those spots, all of a sudden things happen really quickly, and we're like, well, why did that happen? Well, it's because you should have been paying attention 20 cents ago.
and that is very much in line with maximizing the trade because when we say maximizing, usually we think about getting that extra push, but it's also very much about realizing the gains that are already in the trade you've taken. And that's what you just talked about.
Well, it's funny, maximizing to a lot of people they think about adding to their trade. But when you think about it, if you just let's say you get out of 50% of your trade after 50 cents. Well, if you would have just held on to that 50% and made the dollar, you didn't need to add. That's maximizing a trade. Now you have 100% for a dollar versus 50 at 50 cents and 50 at the dollar. Now you're at 75 cents. So maximizing doesn't necessarily mean that you have to add to your shares. It's just understanding your patterns when you can hold and when you can't hold.
And knowing when your risk is going through the roof, because even if you're up 80, you say it all the time, unrealized gain is not gain at all. So let's say it does push to that 80, and the next thing you know, it's a 30-cent bar down. Well, certainly now you haven't maximized.
Well, even one of the simplest examples when we were talking about AMD yesterday in class, and from 101, and it was down, what, 70 cents at that 50. And I said, who thinks we should manage it at the 50? And everyone's answer was no, it didn't show any reason to. But in reality, when we looked at the entire stock, there was all the reason in the world to. So managing it at that 50, even though that's not the trade we're looking for, because technically it had all the way down to 98 based off the prints, was that not maximizing our trade within what they're showing us?
Absolutely, it was.
So, we could let it go back up and, make 12 cents or, whatever, or that was maximizing the trade because there was nothing to show us to push. Just because we get set in what we think should happen does not mean it's going to happen all at once. So maximizing a trade isn't just adding and being able to, to get the whole trend. A lot of the times it has to do with just following what the stock is actually showing you. The difference between 70 cents and 13 cents, that's a big difference. or actually end up losing the trade and holding it back to its original spot when it told you that there's no reason for it. So knowing these spots and just really, this is one of the hardest times in the world that I've seen to be able to focus. Don't get me, like I sit here, I'm bored as hell a lot. So I have to figure out how to focus. So what I look for is just things that continue to happen. So when I see a stock should move $1 10 times, and 8 out of those 10 times it only is moving 80 cents, well, what do you think I should start focusing on?
You have to adjust to the 80.
Yeah, I mean, it's just what they're showing. So I know I can't wait for what happens at 80, because by the time that bar comes down at 80, there's nothing I could do about it. So the only other go time spot that I could really look at to be able to push above it, it's got to be the 60s. So again, when I say common sense, I mean, is there any other way to go about it besides exactly what I just said?
Nope.
No. So, we have to adapt.
That's
Maybe
very
because it's
insightful, Rick.
maybe because it's earnings. Maybe again, from what I see, it's a lot of what it looks like. They're worried to lose pools of people. Where almost like AMD breaks past 100, like they're afraid that people just aren't going to look at AMD anymore. That's getting more complicated and deeper into what the actual economics behind it is. But at the end of the day, it's not really that important. It's just that understanding this is what it's showing. So if it shows me this over and over again, I don't really have any other option but to adapt and utilize it. And it goes back to that AI question. I'm never worried about AI ever trading, because first of all, there's going to be hackers that'll be able to understand what the programming is, and they're going to do the same thing over and over again. Otherwise, then you're talking about the AI that's a person, and then the world's going to end, and we don't have to worry about trading anyway. So, bigger problems at that point. Any questions? Great conversation. A lot of information there. All right, I do want to get another question done real quick before we do end, because we have about 5 minutes. So the textbook definition of an exception. What are some common mistakes and errors students when it comes to them classifying exception and personalities? So essentially what an exception is when there's a bunch. So the easiest way to explain it is that a stock that just continues up, as we've been talking about, that shows building at all its major levels, but never actually comes back to build. That's the definition of an exception. It's when the prints don't match what the stock is actually doing. Now, one of the most common mistakes is for people to switch over. All right, so when they switch over from thinking, these are my rules, and this is what an exception is going to be. So what happens after you watch a stock continue up, and now it's an exception? What do you think is the most common mistake that a retail trader is going to end up doing? So that's interesting. Has to go the other way. That's after they got shaken out a few times. Where are they going to end up going to? As they just see it continue to keep going and going and going and going. They feel the need to chase. They try to chase that trend. And that's one of the worst things you could ever do, because by the time that you have made that decision to chase, how many other retail traders do you think have made that same decision? Oh, unfortunately, way too many. So you'll almost always notice once you click that button and try to chase, that's when they get you. It's because everyone else was watching the same thing and they see it continue and continue and continue, and then they click the button at that point. That's the most common mistake. We have to understand something is that even though we're talking right now, yeah, everyday stocks, there's been plenty of stocks today that I've traded that are following the rules perfectly. All right, so everyday stocks, we're seeing this change. What are the best type of stocks to trade for a newer trader? Is it an everyday stock, a story type stock, or is it a new story? So you can keep trying to trade Tesla. Tesla, you're going to have to notice these things. You're going to have to understand that 80 is where they're really managing it. You're going to have to understand that the prints that are coming in are really pushing it because they don't want the pull. There's a lot of more complicated things that we have to understand about those. But when we look like a stock like IMMP at 250, 249, 250, so we had ask prints at 249 that leaked into 250. All right, pull back just a little bit. You get your perfect trades. So just because a stock becomes an exception doesn't mean it has to go down, doesn't mean it has to keep going up. It leaves you kind of in a, unless you have a lot more data from what you've been watching, it leaves you in one of those spots where you're guessing. Guys, there's times that I watch a stock and I don't know. I go back and forth between this is a long, this is a short, this is a long, this is short. I don't trade them. So same type of deal. When we see those exception stocks start to come in, yes, we're going to look for it to get far away as quickly as possible. But if the prints aren't coming in to show you that, there's no reason that we have to trade it. There will be other things out there that we can find that are going to follow the rules a little bit more. Now, as the whole discussion I just had with Dave is, if you're trading everyday stocks, a lot of these prints are just their face value. They show buy, they want to continue to go higher, something that you need to keep in mind. Not the easiest time to trade right now. One of the best times to learn, though. So keep that in mind as we move forward going into we're almost in June. Today's what, the 17th already? Oh, damn. So keep that in mind as we continue further. All right, any questions before we finish up? Beautiful. We'll talk to everyone in the chat and happy trading.
Good day.